It's been another volatile week for the Aussie dollar as global sentiment continues to gyrate on coronavirus news. The Aussie traded as high as 64.45 earlier this week, a one-month high, on continued optimism that we're past the worst for COVID-19 infections and as hopes shift to tentative economic reopening plans that have started to take shape. The US Fed's decision late last week to bolster their support with a further $2.3 trillion in new loans, including even purchases of higher-yielding, lower-rated BBB bonds, was also a plus. The economic picture is grim, but this policy step, combined with a range of other fiscal and monetary measures by policymakers globally, have at least contained the risk of an even more dire scenario involving a complete, uncontained failure of markets and market functioning. But the recent optimism in markets was dented by weak US data midweek, with retail sales, factory output, and business sentiment surveys all posting historic declines, underscoring the economic toll of the coronavirus pandemic. The IMF's latest global update, released during the week, provided a reality check too. They tore up their 2020 global growth forecast from January of 3.3% global growth, replacing it with an expected contraction of 3%, and suggested the Great Lockdown may rival the Great Depression. Grim economic reports and a renewed decline in oil prices clipped Aussie's wings and sent it back down to a low of 62.65 by midweek. But as we head into the end of the week, sentiment has picked up once again. Reports of encouraging US clinical trial results for treating COVID-19 patients, helping steady markets. That news helped send Aussie dollar back up to 63.50, right where it started the week. The main release on the local calendar was the March jobs report. The headline employment data was better than expected with a gain of 5,900 jobs, but the survey was taken in the early part of March before the introduction of containment measures. Westpac expects a sharp deterioration from the April survey, with the unemployment rate heading to 9% by mid-2020. For now, the more timely sentiment surveys are far more telling, both NAB's business survey and Westpac's consumer sentiment report posting record-breaking declines in April. In the grand scheme, the Aussie dollar looks to have factored in a lot of positives. At current levels, it has reversed the bulk of its steep March decline that sent it all the way down to 55 cents. But the Aussie's broad swings continue to closely track equity market sentiment, so the Aussie dollar's fortunes remain tied to the hip of global stocks and coronavirus sentiment. While there's encouraging signs that the rate of spread for the coronavirus has levelled off in some key hotspots like New York and Northern Italy, the caution has to be that markets are over-egging V-shaped recovery hopes. The reversal of containment and suppression measures is likely to be gradual and very uneven, and as a result, it will take time to spin the global economy back up after shutting much of it down. It will also take time for consumers to regain their footing and their confidence that they can go out in the world safely, all of which points to a slower recovery path than markets are hoping for. As for the local calendar next week, the RBA is back in the frame. The bank's minutes for their April meeting are due, and Governor Lowe is scheduled to give a speech on Tuesday. The Bureau of Statistics is quiet, aside from the brand new release, the Household Impacts of COVID-19 survey due on Monday, and a weekly payroll and jobs wages report on Tuesday. Globally, the main interest will be the advanced PMIs across Europe, Asia and the US. Markets will remain focused on when and how quickly containment measures will be lifted too. It's a double-edged sword though. Early reopening may result in renewed outbreaks leading to another clampdown. We'll speak again next week.